Good evening, I'm Giuseppe Basile. I'm the analyst and trading mentor you can find at the website www.fibstalker.com. I also post regularly on Twitter using the fibstalker nickname. Good evening, today is April the 9th, 2014. It's 10 p.m. time in Toronto. And in this video, I'm going to review for you the euro dollar, the S&P 500 mini, the dollar index future, and the gold mini futures. And this video is part of my daily review, which I post on my blog, and it's for you to review it. I hope you enjoy it. So starting from the euro, then what you see on the screen is the daily chart, and you will remember that I've been looking at a sequence of measure move here, lows to highs, then again lows to highs, and then there was a very good potential trade here, and I gave these potential values here with the stop loss, and we saw price getting into the first target. The next measure move failed, and when that happened, I mentioned that we would actually start a move lower. This is the next measured move, and we can see the price went below this 138.46, and when that happened, you know that I'm always looking at the all the way halfway back from highs to lows. So price eventually got there. To get there, there is very often a measured move, and we got this measured move. I actually suggested a potential trade here that had this 138.57, 138.83, so less than 30 pips with a potential risk, with a potential 3 to 4 reward to risk here, but the risk was 30 pips here, and the price went just 5 pips above this target level here, so it was for me sufficient to have a target hit here. And you remember that in my last review in the weekend, and you can subscribe to the free newsletter to receive that, I mentioned that I wanted to see this 136.63.62 level pierced on the downside here, and that would be an indication that program trading and other programs and traders who have been supporting this price in this area would lose, in my view, in my opinion, interest in trading this market long. But this didn't happen, as you can see here, and price just reversed. The sequence of measurement on the 15 minutes moving lower here failed, and we start seeing this move on the upside. So now there is the potential for this market. So the next measure move then failed because as we can see here, the highs to lows was broken. Actually today we had this huge move higher here, and so there is support in this 137.21 area, as you can see here, and the price now is going to be pushed into a level of resistance. We always find some sort of resistance when we trace the old halfway back. So I think, it's my opinion, we are going to see some resistance here. Now, based on my studies, I also observed that this area of support or resistance are confirmed when the 61% level here, 138.54, is pierced on the upper side, and this will actually bring price above into, again, very close to that level of support, 141. Indeed, it's 140.81, and this would be the first target of this area of support I'm watching at the moment. So there is still a possibility for price to just move higher into that larger target. And if you want to understand how I get to that larger target, just review my weekly newsletter, and actually we can you can see how I get there. So now if we pierce on the upside this 138.55 level, I'm in my opinion there is going to be a very good opportunity on the long side here. We will have the potential entry level and stop once we print the high here and the market start correcting. At that point, I will trace from lows to highs here to get a potential entry point. Moving to the S&P 500, this market moved lower yesterday and today printed lower lows here and tried to recover a little bit. There is the potential for this market to retrace. So there is always this potential to retrace all the way halfway back here, and actually if the market gets there, this could be a potential short opportunity with a risk of 7 points here and a reward to risk which is a multiple of that, probably 4 to 6 reward to risk here. So there is a potential for a trade, and it's also my opinion then that as this market was not able to make it above 1882 area here, there is a possibility now for a retrace into 108.08 level. So we will see what the market brings. Of course, the market can always do anything. This area, however, this 1861.50, 61.25, it's an area of potential resistance here. And of course, if we see the sequence of measure move higher on the 15 minutes fail after testing this level 1861, there is a possibility for a continuation lower. Moving to the dollar index mini, we had this huge move mimicking the move higher we had in the euro dollar, of course, and want to show you what we have here and where is the potential for this market to move to. I'll just adjust the scale here a little bit before we get to that. Just want to show you on the daily chart. I will remove the change in scale here. What was the sequence that we have been following, and why I ground my analysis into the method that I use. By tracing highs to highs, we had a retracement into the old way halfway back here, 79.80 level, and the level 85.50 was a level where bears and resistance was actually located, as we can see here from price. But price eventually make it right into that first target, 80.76, and after that it started a correction, and my first thought would be that we would correct into the next measured move and then continue higher. And actually price had a little reaction here at this 80.34, but then today price just broke down, and it broke the next measured move higher, and actually broke also all the way halfway back here, which for me I consider, in my opinion, this is I consider this a confirmation of this area of resistance. So it means that there is now the potential for price, in my view, to continue lower, and there is the potential for this price to get into a first target. If price moves below these recent lows, we can actually move into 78.84, and the level is the first level I always consider when I trace this measured move. So that's where we could potentially see price move into. So it's very, very important to look at what happened to the dollar in the coming days. This is going to affect the euro and also the pound versus the US dollar, which I'm going to review in a separate video. So this is something we could not anticipate, so we just keep following the method and the sequence of measure movement until the trend changes. So apparently here on the daily chart there was a change in trend for the dollar index, and that happened unfortunately or luckily if you are short the dollar and long the euro within an area of resistance which started this 80-50. The 61% level, 80 level here was never pierced on the upside, so we have to consider bears in control here for this market, which actually has the potential to push higher all the forex pairs that depend on the US dollar. Finally, I want to close with gold. I've been looking at gold for now since it's the start of its move higher. I've been studying the sequence of measured move. We had first highs to highs here, and which brought price into this first target 1263. This is always a high probability target, and then we moved from to the next measure move here, lows to highs, and price again never pierced the 1236 level here, 37, and it broke price into first and second target. So following rules, then as the second target was hit and price went above it, I started looking for measure move here, but price never traded this level, so it just continued higher. So I had to find the next anchor, so program trading or whoever is in control of the market or is capable of influencing this market has been looking at this new anchor here, and as we can see, this anchor was actually participated here, and there was an opportunity to enter this market on a failure of the 15 minutes trend lower here, and trade it to the first target. Eventually this market went to trade the second target as well, and there I've been looking at this next measure move, which clearly failed. So you will remember at that time I started looking at a short, and actually the potential entry in my opinion would have been trading below this 1362 with a stop above highs, because when the sequence of measured move fails, I'm always looking at the all the way halfway back, and if we, by entering 1362 on the breakdown with a stop above highs, would have been of course a number of points here, 1390, so 38 points, but with the potential to get a 3 reward to risk trade here, but always mind the risk. And we had a sequence of measure move here. The first one could only be identified after the fact if you didn't trade the breakdown here, but actually after we identified this level, we saw from 1341 price moving into 1311 and the second target 1296. Once the next measure move failed, that was for me the confirmation that this support area starting at 1285 was real, and there was actual participation there. So I provided this level in advance, 1304, actually 3 days in advance, and price eventually traded there. Thank you very much. Bye bye now.